Hello, this is the Chart Profit video. A little over an hour into the trading day, Friday 9th of June. This from the pre-open. We're looking at the E-mini S&P future. Just over a week ago, the minor point of control migrated to 24.13, this level here. And so pre-open on Thursday a week ago, bonds and gold have moved to stronger price locations. Oil has moved weaker. Not an ideal scenario for equities, but as long as the E-mini holds above what is now 24.13, that level we just discussed, it is in a strong price location even on the minor time frame. And subsequent to that, we've seen aggressive buying above that level, and all value areas that you see here have been printed above that point, 24.13. So we're in a strong price location on even this minor time frame. We've seen right down on the day frame, we've seen the 12-day point of control migrate to 24.32 over the last couple of days. We've seen price oscillating around that level. It's worth monitoring, but just on an intraday basis, so today price relative to this level would be an indication of intraday strength or weakness just for today. Also noted here that minor distribution suggests that 24.43 might reject a price probe. It's kind of on an extreme of some of these minor distributions. And just on the really minor time frame, it'd be better to see price accepted at that level rather than a quick rejection. In any event, as long as price holds above 24.13 at the moment, and unless that minor point of control migrates, as long as we hold above that point, we're in a strong price location on anything like an important time frame. Just looking at the live chart, this is a half-hourly chart. Here's that level 24.43. We're actually probing above that, and as I said, price acceptance up here would be a positive in the sense that it would suggest the distribution on a larger time frame is sort of dominating. Just right now, just over an hour into the trading day, we wouldn't want to see this price quickly rejected. So far so good today. Just look at the breadth indicators through Thursday for New York. Seen some improvement this week. The bottom two indicators, net new highs 25, 5-day moving average, and the percentage stocks greater than their 50-day moving average. I combine these two into a color study. These both above their important levels, and that gives us a continuation of this green bar here in the middle, which represents the daily breadth indicators. So breadth here looking pretty healthy. Price momentum has remained above zero from here, so daily trend has been up from about this point, and at the moment momentum is also higher. So this is a pretty healthy looking pulse chart. Just quickly looking at sentiment here. This is my version of the Ridex assets ratio. Ratio peaked on the 1st of March, as we know, on the day the market hit this point here. We saw a bit of a correction from there, but now the market has broken out higher, and the assets ratio is down here around the level 9. Suggests that as far as the retail traders in the Ridex funds are concerned, in this short time frame, they're pretty skeptical about this breakout, and that's from a contrarian point of view. As I said a couple of weeks ago, that's usually pretty bullish. We'd watch for any rapid increase in this ratio should the market continue higher. We'd especially watch this level 14, which has only been touched twice, once here and once back over here. Just looking at the bull fund assets in isolation, just over a week ago, we saw the highest level this year. But actually, as the market now has moved higher, the assets as a total in these bull fund fallen back over the last couple of days, remembering that these are contrarian indicators. In the public poll from AAII, and we're looking at a weekly chart here as the market's broken higher, hasn't really caused any kind of excitement in this indicator, which remains pretty subdued. Bulls percentage was higher this week at 35.4. It's up quite strongly from 26.9. 3 weeks ago, the bulls percent fell to 23.9. That was the lowest since November. It was at this point here. Again, we're seeing something similar in the Lipper US fund flows data. They reported equity fund, including ETF outflows, this week of $5 billion in the week to the 7th of June. And I said here, although the previous week there was a large inflow, just for that week, 5 of the last 6 weeks have recorded outflows. And I just put here, remember this is a contrarian indicator. So the 4-week flow in black is down here below zero. If you remember back in February, it was actually up here. I've actually read some articles over the last couple of days telling me that the private investors are piling back into the market at a rapid rate, and how concerning that is. But I don't see that reflected in these indicators at the moment. Okay, we'll look at some charts here. This is the spider out at a new high today, right now. Russell 2000 ETF IWM, which has been the laggard again. XLK, the technology sector, relative leader, again new high. We had an election in the UK yesterday with disappointing results for the Conservatives. FTSE 100 here, doing quite nicely today, even so. We'll look at the pound chart in a second. That will probably explain why the FTSE 100 is doing well today. German DAX is also up today. T-bond ETF, TLT, has been down for the past couple of days, having reached its highest level since November earlier in the week. As long as this chart holds above the 8-month at 121.63, it's in a strong position. Very similar chart from GLD, the gold ETF, again reached its highest level earlier in the week since November. Some weakness since that point, but it's still holding above 119.84, which is the level to watch. That's the major controlling price, and as long as GLD ETF holds above that level, it's in a strong position. And this is the oil ETF, USO, and we know the 4-month is here at 10.28. And I've said that if the chart is printing below that level, it's in a weak price location, which it is. And you look at oil in this weak position, and gold and bonds, if they can hold their strong position, it's not a particularly encouraging scenario for stocks. Maybe this is something we'll play out over the longer term if things don't change here, but as we've just seen, equity is currently in a pretty strong position right now. The dollar index rallying back a little bit over the last couple of days, which hasn't helped gold, as we've just seen. The big support on this chart is down here at the 2-year at 95.57. Very often these controlling prices act a little bit like magnets and will draw price to them. So over the last 2 years we could call this level value. With the dollar index being in what's clearly a downtrend, we could see that level tested just above 95.50 there. Similar situation, or the inverse situation, on the Euro FX chart, with the major being at 113.29. Again, we could see price, although we're seeing a little bit of weakness at the end of this week, we could easily see this level probed over the next few days. And this is why the FTSE 100, the large cap UK index, is holding up well following that election result in the UK. The pound suffered quite badly, down about 2% at one point. But again, in the longer term, as long as this chart holds above 124.78, which is here, which is the 15-month controlling price, this is all strong price location. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.